Ollie, give us the latest in terms of the woes of BMW and VW. This is coming in quick succession, two companies with two different sets of issues.
Yeah, Tom, I mean, if you needed any more bad news from the German auto sector, you got it yesterday. For BMW, it's a recall of 1.5 million cars. That is down to do with brakes, the issues around the brakes that have been furnished by Continental. But what it has done is sort of for the broader term, obviously there's big questions on the macro and demand in China, demand in Europe, demand in the auto sector in general, but it has meant that BMW is going to cut their margins. They're now aiming for 6 to 7%. Before it was 8 to 10%. And for this car maker, and really for all car makers, but particularly for sort of a higher-end car maker, the luxury car makers, generally speaking, that margin is absolutely crucial. In terms of Volkswagen, what they have done is after they said that they're maybe closing factories last week, they have said yesterday that they're going to terminate worker protections that they've had for 30 years, Tom. Huge worker protections. This would protect jobs into 2029. That now is going to change. They're dissolving that. That means that these jobs are no longer safe, starting basically at the midpoint of next year. And it basically sets up this huge union fight for Volkswagen. And part of the reason they've never done this in the past is that half of the board seats are held by worker representatives of some kind. The state of Lower Saxony owns 20% of the company, so obviously is not in favor, generally speaking, of job cuts. So this is a very tough fight, and it just comes to show how difficult things are for Volkswagen right now, and that they're willing to undertake this fight. When you look at the market reaction and what happened yesterday in the session, I mean, all of the car makers in Germany got absolutely crushed yesterday. We saw Volkswagen down 3%, almost 4%, BMW 11%, Continental about 10%. And we should say on Volkswagen, right, the price of the shares there, it has gone from the biggest car maker in the world, the most substantial, to being worth about 6% of Tesla's market cap.
Wow, 6% of Tesla's market cap. And look, you nodded to this, the capacity issue, and this is clearly something that VW are trying to address with those planned factory closures, or at least those warned of factory closures. They are not producing up to their capacity. There's a gap there. How big is that gap, Ollie?
Absolutely. I mean, we have a great sort of data journalism piece that we put out on the terminal today, and it looks at basically this issue of undercapacity. So basically, a third of major plants in Europe are producing less than 50% of their capacity last year, right? That is in part because sales are still way below their pre-pandemic level. They're 3 million cars below the pre-pandemic level. And when you think about kind of what the contribution of all this stuff is to the European economy and to GDP, I mean, it's 7%, the auto sector, of the European economy. It's 8% of all manufacturing jobs within Europe. It's 13 million jobs. And when you look at the breakdown of who's kind of most affected by country in terms of the full manufacturing share, so this is all manufacturing share, what percentage of it belongs to the auto sector for the EU countries? Slovakia, Romania, Sweden, they're all about 14% or more of all their manufacturing jobs are within the auto sector. You go here to Germany, and this is a major economy in Europe, that's still 11% of all manufacturing jobs within Germany. In the EU, it's about 8% on average. But again, when you think about kind of the future of this industry, which is really facing all of this upheaval and starting to potentially cut jobs across the board, this is going to have a major impact, yes, on the economy, but also on jobs.